Good morning, grade 9s. Today I am going to start with a revision of what we have done thus far. Remember what an asset is. An asset is a resource that we have obtained that will be used to generate income or simply money for the business. Now, I said we have two types of assets. We've got current assets as well as non-current assets. Current assets, these are assets we expect to use or convert them into cash within 12 months. 12 months is simply a year in simple terms. Examples of your assets will be trading stock. This is the stock that you normally buy in order to resell at a higher price. Trade debtors, these are the people that owe us as the business. Consumable stores on hand, these are simply your expenses like stationery, packing materials that were not used. We've got bank, we've got accrued income, prepaid expense, petty cash, cash float, etc. I did explain that bank is the most liquid current asset, meaning that it is the most used up current asset and is the quickest current asset to be used. Then I spoke about non-current assets. I said to you, non-current assets are assets that are expected to be used or converted into cash over a period exceeding 12 months. Then I gave you examples of these assets. It will be equipment, vehicles, machinery, patents, copyrights, buildings, and land. Note that land does not depreciate in value over time, instead it appreciates. You may buy property right now at 700,000 Rand, and if you want to sell it after 10 years, you will sell it for more than 700,000 Rand. It is because the value of your properties will increase. It will appreciate instead of depreciate. Then we've got liabilities. What are liabilities? Liabilities are present obligations previously obtained the settlement of which is expected to result in outflow of money. So when you settle it, it will result in outflow of money. Settlement means repayment. So that is what a liability is. It is a present obligation arising from that was previously obtained, the repayment of which is expected to result in an outflow of money. Okay, what is a present obligation? A present obligation, it is a duty or responsibility to act or perform in a certain way. Obligations may be legally enforceable as a consequence of a binding contract or statutory requirement. So your obligation is simply, if you borrowed money from the business, you need to make sure that you repay it. We as the business, our liabilities, we have the responsibility to repay them. That is what an obligation is. Because it's a present obligation, it is enforceable for us to repay the liability that we took. Liabilities are also divided into two kinds. We've got current liabilities, similarly to current assets. However, note the difference. Here we expect to settle. To settle means to repay. We expect to repay this liability within 12 months. We expect to repay this liability within 12 months. We expect to repay this liability within 12 months. Examples will be trade creditors. Trade creditors are simply the people from whom we buy on credit. Then we've got accrued expense. I will explain that later on when we do other chapters. Income received in advance, current portion of the loan, etc. Then we've got non-current liabilities. These liabilities are expected to be settled over a period. Remember what settle means. It means repayment. These liabilities are expected to be repaid over a period exceeding 12 months, exceeding a year, that is. And those examples will be long-term loan and mortgage bond or mortgage loan. Remember, I said mortgage loan or a bond is a long-term loan used to finance the purchase of a house. Then we've got owner's equity. Owner's equity is the residual interest in the assets of the entity after deducting all its liabilities. It is the residual interest in the assets of the entity after deducting all its liabilities. In essence, your owner's equity is assets minus owner's equity is assets minus liabilities. Owner's equity is simply assets minus liabilities. Capital, drawings, shareholders' equity, retained income. All of those will be examples of owner's equity. Income will be part of owner's equity, but what is this income? Income is simply increases in money or its equivalent. During the accounting period in the form of increases of assets or decreases of liabilities. Income is simply money, is increases in money during the accounting period in the form of an increase of assets and decrease of liabilities. And obviously income will increase owner's equity. I repeat, income will increase owner's equity. Now, income will increase owner's equity, but any other thing that is contributed by the owner that will increase our money and increase our assets and decrease our liabilities, that comes from the owner. Anything that comes from the owner may not be recognized as income. Anything that comes from the owners of the business may not be recognized as income. Income includes revenues and gains. These are examples of income: fee income, rent income. Fee income is a fee that you get paid after performing a service. For instance, if my business is to fix cars, when I have fixed a person's car, the amount of money that they pay me is regarded as fee income. Rent income is rent that you receive when you rent out your property to tenants. They will pay you money. That money will be called rent income. They will pay you rent for using the space that you provided to them. Profit on sale of assets, we will deal with that later on when we do asset disposals. We've got sales. Sales is simply the income that you get for selling trading stock. Commission income is when you perform a service that you get paid on commission basis. So basically, we as the entity might be required to sell, for instance, for another entity, and that other entity will give us commission, and that commission will be income. Then we've got trading stock surplus. I will explain that as we go. Bad debts recovered, discount received. All of these will fall under your income. Then we've got expenses. What are expenses? Expenses are decreases in money or its equivalent during the accounting period that will result in decrease of assets or increases of liabilities. That will result in decreases in equity. Expenses are decreases in money during the accounting period in the form of decreases of assets or increases of liabilities that will decrease owner's equity. In simple terms, expenses will decrease owner's equity. Expenses include losses. Here are examples of expenses. We have salaries and wages, audit fees, rent expense, depreciation, loss on sale of assets, directors' fees, bank charges, interest expense. All of these are examples of expenses. Remember, expenses decreases in money that will result in decreases of assets or increases of liabilities, and and liabilities decrease owner's equity. Liabilities, obviously, expenses decrease owner's equity, not liabilities. Sorry for that. Expenses decreases owner's equity. Note that expenses decreases are decreases in money during the accounting period in the form of decreases of assets or increases of liabilities. However, remember that your expenses decrease owner's equity. So anything that is an expense will decrease owner's equity. Other than anything that decreases owner's equity that comes from the owners. Basically, if owners decrease owner's equity, that will not be regarded as an expense. Then we've got capital. These are contributions from the business by the owners of the business. It's actually contributions to the business by the owners of the business. It's contributions to the business by the owners of the business. They may contribute cash, which is money, or assets, like your vehicles, equipment, or they can simply contribute their skills to the business. Then we've got drawings. Drawings are simply distributions from the business by the owners. These are distributions from the business by the owners. These are distributions from the business by the owners. Capital, on the other hand, are simply contributions to the business by the owners of the business. Cash or assets may be distributed to the owners of the business. Basically, owners may take money from the business or they may take assets from the business. Whenever the owners take money or assets that belong to the business, that amount of assets or money will be regarded as drawings. Anything taken by the owner for personal use will be regarded as drawings. Assets, liabilities provide information for the balance sheet in order to calculate the net worth of the business. In short, assets and liabilities provide information for the balance sheet, and they are used to calculate the net worth of the business. Expenses and income provide information for the income statement. And we use expenses and income to calculate net profit. Net profit is calculated by taking income minus expenses. Expenses and income are used to determine the performance of the business. The performance of the business is determined by the amount of profits that the business makes. Drawings and capital provide information about how much the owner has invested in a business. Remember, contributions by the owner will be capital. Drawings are distributions to the owners. Whenever the owner takes any money or asset from the business, it will be regarded as drawings. When the owner contributes money to the business, it is regarded as capital. Here is the accounting equation. It means your assets will be equal to owner's equity plus liabilities. Assets are what the business owns. Liabilities are what the business owes the owners of the business. Liabilities are what the business owes the lenders of the business. Liabilities are what the business owes the lenders. The accounting equation consists of only three elements, that is assets, owner's equity, and liabilities. The accounting equation consists of only three elements, that is assets, owner's equity, and liabilities. When I talk about elements, just know that I'm talking about assets, owner's equity, and liabilities. Retail or spreadsheet or accounting equation. Assets will always increase on the debit side. Assets will always increase on the debit side. The increase will be shown as a plus in the accounting equation. Assets will always decrease on the credit side. This side, which is the left-hand side, is called the debit side. The right-hand side is called the credit side. Assets will increase on the debit side and they will decrease on the credit side. Oh, and the decrease is shown as a minus in the accounting equation. The decrease of assets is shown as a minus in the accounting equation. Owner's equity increases on the credit side Please note that this is no longer the same as your assets. Owner's equity increase on the credit side. Remember, assets increase on the debit side. Owner's equity will increase on the credit side, and it will decrease on the debit side. Owner's equity comprises of capital. Capital, remember I said these are contributions by the owners. Capital increases owner's equity. Capital increases owner's equity. If capital increases owner's equity, it means capital will also increase on the credit side. If capital increases owner's equity, it means capital will increase on the credit side. Capital increases owner's equity. Capital will increase on the credit side because it increases owner's equity. Anything that increases owner's equity will increase on the credit side. Capital increases owner's equity, and obviously if it increases owner's equity, it will increase on the credit side. Income increases owner's equity. Income increases owner's equity. Therefore, income will also increase on the credit side. So two things for so far increase owner's equity. It is capital as well as income. Drawings are what are distributions to the owners of the business. Therefore, drawings decrease owner's equity. Drawings decrease owner's equity. And remember, owner's equity decreases on the debit side. The first thing that will decrease owner's equity will be drawings. Drawings decrease owner's equity. Expenses also decrease owner's equity. Therefore, expenses will be on the debit side. Both drawings and expenses will increase on the debit side because they reduce your owner's equity. They increase on the debit side because they reduce your owner's equity. Anything that reduces owner's equity will be debited, will increase on the debit side, just like your drawings and expenses. This is the abbreviation. SIDE means capital, income, drawings and expenses. An increase in owner's equity is shown as a plus, and a decrease is shown as a minus in the accounting equation. An increase in owner's equity is shown as a plus, and a decrease in owner's equity is shown as a minus. Mention two accounts that will decrease owner's equity. What are they? It is drawings and expenses. Mention two items that increase owner's equity. What are they? It is capital and income. Just to recap, owner's equity increases on the credit side and it decreases on the debit side. Under owner's equity, we've got four accounts. It is capital. Capital increases owner's equity. And the fact that capital increases owner's equity, anything that increases owner's equity will increase on the debit side. Capital increases owner's equity. As a result, capital will increase on the credit side. Income increases owner's equity. That is why income will also increase on the credit side. Income increases owner's equity. That is why income will also increase on the credit side. Drawings and expenses reduce owner's equity. That is why your drawings and expenses will be on the debit side. Drawings and expenses reduce owner's equity. Since they reduce owner's equity, they will reduce owner's equity on the debit side. An increase in owner's equity is shown as a plus. An increase in owner's equity is shown as a plus. and a decrease in owner's equity is shown as a minus. Now, drawings, expenses, and assets have a debit balance. So assets will increase on the debit side, expenses will increase on the debit side, and drawings will increase on the debit side. Capital, income, and liabilities have a credit balance. We normally call it silk or click. Silk or click. Please remember these examples. I gave you examples of fixed assets, which is buildings, land and buildings, vehicles, equipment. I also gave you examples of financial assets, which is fixed deposit and investment. Under current assets, we've got inventories. Under inventories, we have trading stock. Then we've got debtors. Under cash, we've got three things: bank, cash float, and petty cash. Assets will increase on the debit side, and they decrease on the credit side. Assets will increase on the debit side, and they decrease on the credit side. Capital will increase owner's equity. Capital will increase owner's equity. Drawings will decrease owner's equity. Drawings will decrease owner's equity. Anything that decreases owner's equity will be recorded on the debit side. Anything that increases owner's equity will be recorded on the credit side. That is why we've got all these expenses on the debit side of your profit and loss. We normally use the profit and loss account to calculate our net profit or our net loss. Under expenses, we've got items like your cost of sales, interest expense, salaries, wages, stationery, fuel, packing material, repairs, insurance, advertising, discount allowed, telephone, water, and electricity. Under income, we've got sales, current or fee income, interest income, rent income, discount received. Under income, we've got sales, current or fee income, interest income, rent income, and discount received. Non-current liabilities have long-term loan and mortgage bond. I did explain that. Current liabilities, we have creditors. These are people from whom we buy on credit. Bank overdraft is when you withdrew money from your bank account. And short-term loan. Liabilities increase on the credit side, and they decrease on the debit side. This is very important. Please make sure you write everything. As a matter of fact, I did send you guys the notes on this. Highlight them and make sure you understand these concepts. Next time I will be doing the accounting equation, and you will not be able to do the accounting equation if you do not understand the contents of this video. Have a great day.